Hey guys, how you doing? We will get started here in just a second. Let me drop the link in. All right, link has been dropped. Cool. Hey, can someone let me know that you can hear me all right? That would be appreciated. Get rid of that. Get rid of all that. All right, we'll deal with that later. Good morning. Yes, everyone can hear me. Beautiful. Let me put my stream on. Let me share my screen, or rather. Window, entire screen, bang, bang. All right, awesome. You guys should see the Discord right now. Please let me know if that is a true statement or not for you all. Exactly, Jim. That's the point. You can watch this whenever you want to. You can, right? You can replay it. If you missed the live version, you can watch it on, 1x, 2x, 1.5x. So that's exactly why we do it, right? And then obviously, if you're in the Discord, you can read the pre-market note, which is the foundation of what we're about to talk here. So, and that's, generally prepared 7, generally probably starts at 7 o'clock, wrapped up by, when was it wrapped up today? Well, today it started at 6 o'clock and it wrapped up at 7:47. So yeah, you get things kind of all different time frames for you, right? Right. Our pre-market data generally updates around 7 a.m. So when we tell you guys, generally good to go. So yeah, it's very nice having that pre-market data updated and all that good stuff. But you guys are here to talk about some pre-market prep. So probably starting down here, firstly, just we'll get to this statement in a second, but, call dominated environment overall, which we'll get to in a minute when we review the different structures, different primes, time frames, all that good stuff. So, right, call dominated structure, 68.75 is going to be a key level that we're going to see. And then, right, this means, we're on the positive convexity curve leading up, 6,900, which is kind of where we're poised to open this morning. 25, then 50, upward in price, capturing long deltas and some big steps, which is supportive. So yeah, that's that. Let's get to the pre-market prep from today. So yeah, looking at pre-market prep, right? Stepping back for a second, Gamma Edge, we focus on the options markets, and no, you don't need to explicitly trade options to benefit from what we're about to talk about. What we're more referring to is we utilize the options market in terms of how people are positioned. Why? Because A, options markets are inherently forward-looking. B, just the growth in the options market, the prominence in modern market structure, and its impact on the day-to-day price movements. Like, it's very beneficial to understand what is happening kind of under the hood of the market, right? It's like if your car is making a weird noise, kind of surface level price chart is like, that's funny. But then, like, you wouldn't really stop there, would you? You would probably take it to the mechanic, take it to the shop, open up the hood, see what's actually happening, to the engine, all those different parts. I don't know anything about engines, but a decent analogy. And that's kind of the options market and kind of what we like to do. So, yes, right, technical analysis, very valid. A lot of people use it. But then it's kind of marrying up kind of what we're seeing on the price chart and then understanding kind of where those key confluence levels are under the hood. So with that said, right, looking at the SPX full complex, keep in mind, this is SPX. There's two components of SPX, SPX-A and SPX-P. We break those out separately, right, because there's different people that operate in each of those, right? SPX-A, generally, we think of that more as kind of institutional, longer term, slower turning over capital, because that's where your monthly, that's where your quarterly expirations are, but it's significantly bigger than SPX-P. SPXP, you can think of that as a speedboat. That's where your short-term traders are. That's where your 0DT, your weekly, your monthly expirations are. So it's a smaller market, but it turns over a lot quicker. And we like to focus on that, right, from a trading point of view, because that has like a greater sensitivity and change of positioning day over day. And then, right, you know, when we do see changes in the structure kind of day over day, week over week, it always starts in SPXP. And then, like, if there is persistence to that, then it's going to trickle into the SPX-A structure. So like as an example, you know, we're call dominated, SPX-P starts to shift to being put dominated. Generally, then like if in April, as an example, right, that shift manifested all the way to the SPX-A, that became put dominated, and we got that long persistent downtrend, right? And then the benefit of of what we do here too is looking at day over day change, right? So, you know, it could be very put dominated, but then we see that day over day change, starting to be less put dominated, and then becomes more call dominated. So that's very important for setting our like swing trading environment and compass, so to speak. And then obviously we do the 0DT stuff, which is very, you know, much more specific on the kind of daily structure and all that good stuff. But with that, enough of the ranting, getting into the specifics. So looking at the market trend model, this is something a little bit separate from our options analysis, but it's very much tied together. So this is looking at the underlying momentum in the structure, specifically using the tick index. Don't know what the tick index is. You know, you can Investopedia that, very good articles. You can read on that, but simply put, you know, it's a way of measuring buying and selling under the hood of the market through, you know, orders being presented to the exchanges. So obviously the condition right now is we have the cumulative tick, which is the shortest term time frame that is trending higher. Our railroad tracks, right, which is just kind of a short-term moving average ribbon trending higher. The longer-term ribbon trending higher. Keep in mind all this. We have back testing on all this stuff. So you know, when we say moving averages, all this good stuff, you know, cumulative tick above railroad tracks, above the longer-term moving average ribbon, like that means something because there's back tested, and we have a whole kind of tag combo system, so to speak. That's been back tested as well. So we kind of understand based off the conditions of the market, what we can just kind of expect, right? Or what the conditions are, right? This is not forward looking, not predictive, but by understanding what's happened, we can, you know, give this kind of a good like feeling, for lack of a better term, of what the market is doing, right? So everything is moving higher, very good from a swing trading point of view. Both of our mechanical strategies, the P-Trans plus GEX and the wheel strategy, are predicated on this model, meaning that our bullish momentum signal, for those that don't know what that means, right, that's TC3 or TC4 if you're in the community. It simply just means the cumulative tick is above the longer term moving average ribbon. Both are trending higher than, by definition, for us to allow to enter new long positions. And so that signal is turned on. So we are permitted to be entering long positions on those strategies. From a swing trading point of view, you know, that is a good time to be looking for trades as well. You know, looking at the filter tick, which is a measurement of significant buying and selling on an intraday basis. Yesterday was a very good day. We kind of saw persistent buying throughout the session. This was a classic linear up day via the cumulative ticks, you know, strong persistent buying throughout the session as well. So everything is constructive right now. Yeah, not much else to say. You know, just so you know, right, if you're trading, you know, with this model, if we start to see action like this where the cumulative tick starts to dip below the moving average ribbon, that's generally a good, historically has been a good kind of lock partial profits in on the short-term uptrend that got us into that condition in the first place. So just make sure that you're cognizant of this model, you know, kind of glancing at it, you know, a couple times a day makes a lot of sense. And we're streaming this, so don't feel like you need to get TradeStation on your computer, or, you know, we offer this for Thinkorswim as well, but we are streaming it. You know, we post updates if people ask for it, all that good stuff. we're trying to work on a trading view model as well. So stay tuned on that if we're able to get something launched there. Also, if you guys have any questions, let me know. Drop them in the chat. We can get to them. It can be single stock, can be 0DT, whatever you want it to be. So getting back to the SPX analysis itself, right? So it all starts with the transition zones. 68.75, right? That's top of the DEX transition zone, top of the GEX transition zone, based off delta and gamma respectively. So, right, we really just want 68.75 kind of the key line in the sand that we want the bulls to maintain. Other things, it's a call dominated environment above and below spot price. That is a classic signature we see in kind of sustained moves higher. So that's what we want to see. Then obviously back to our day over day change. If we start to see weakness, right, kind of that out of money call speculation leaving, out of money put speculation perhaps entering, then, that's where we obviously kind of sit up, take notice of that and understand, market dynamics maybe changing. And then, right, that should kind of be supplemented with the market trend model weakening as well. But right now that's not the case, right? The market trend model is in agreement with the SPX kind of positioning. Both are trending higher and position for sideways to higher movement. Not really a ton else to say right there, right? 6,900 Livermore strike key level where it's set to open the pre-market. 6,950 is plus GEX, right? That just means the strike with the most call gamma overhead, kind of the key convex strike. We like to think of that as kind of a key upside target. So yeah, kind of a good first target up there on a swing trading time frame. Going to SPXA, right? Remember that this is the cruise ship. We're looking specifically at just this would be next week's monthly expiration. Again, 68.70, top of the DEX and GEX transition zone, more or less the same as 68.75 on that full complex for the SPX that we just looked at there. Really not a ton else to say. Call dominant environment, everything looks fine here. Here, this is just looking at true gamma, true delta zeros. It's kind of a proprietary metric that we've developed, right? Both of those metrics are trending higher historically when they're trending higher. Spot price itself is trending higher. That is a constructive signal for, wanting to be long in the market or having a long bias, so to speak. More on this tool. We have a whole blog article on that. I can show you that later. Just kind of in the being cognizant of the time here. Looking at SPXP full complex again. This is the cruise ship. Much of the same, starting with the transition zones. 68.75. Again, I said at the beginning that's gonna be a key level. It's been a key level throughout. That's just a key line in the sand for the bulls right now on pretty much every time frame that we have looked at. Then again, call dominate above and below spot price, basically like an identical structure to SPXA. Not a ton else to say here. 6,900, 6,950 plus GEX again, confluence there. So yeah, frankly, not a ton else to really say right now. The structure looks fine. Probably, the last thing to say, right? No analysis is complete without, the upside and the downside case. Obviously, the downside we talked about from the market trend model point of view, we start to see weakness in the cumulative tick and the railroad tracks. And then right down here, we're saying fear starts to grow below 60, 68.45 is the bottom of our transition zone. So if we were to lose that, that would start to get more concerning to the bullish case. And then, right, especially if we lose 68.35, which is negative GEX, in the structure right now. So then we get to SPX 0DT dashboard. If you guys have any questions, right, again, pop them in the chat. We can get to them. So yeah, SPX 0DTE, a little over 600,000 contracts set to expire today. Transition zones. DEX and the GEX, again, key confluence at 68.75. To the downside, 68.60 is bottom of the transition zone. So think of those as kind of two good key goalposts. And then layering on top of that, our drunken sailor range, 68.80 to 68.50, which is, again, is negative GEX on the day. The other drunken sailor range is, again, kind of key goalpost on the session. This is where we need to see, volume intraday volume, call it volumetrics, intraday volume starts to become aggressive towards one way or the other based off the break. So if we break above 68.80, we want to see that intraday volume start to expand to the upside as well. What we mean by expand is out money call speculation starting to trend higher, up and out above spot price, and to the downside, right? That would look like out money put speculation to the downside, out money call speculation is trending lower as well, kind of parallel lines. And then, if we're kind of stuck in between these ranges, we get that classic kind of chop with the intraday volume tool. Let me show you guys what I mean. So here, looking at this, like yesterday, or this was yesterday, I mean, this is just clear kind of upside speculation, right? Call centroid moving sideways to higher throughout the session, put centroid kind of 45-degree angle higher, which is a signature of when we get those sideways to higher days. So this was a good example of today of what we would want to see if we break above the 68.80 goalpost. And if we want to expect, higher, price appreciation, we want to see that alimony call speculation leading price throughout the session, and then alimony put speculation, moving higher as well. Getting back to the levels, space game plan. Let's see. Yeah, not really a ton else to say here. I mean, there's a little bit of a pocket between 68.80 and 6,900. And then, once we start to get about 6,900 again, looking at the distribution of speculation via this synthetic net open interest that we like to look at. There's a good bit of speculation here at 6,900. So again, what that means is to overcome this strike, we're going to need to see a good bit of, speculation, intraday buying, help to, give us a gusto to get above the strike and to continue to carry us up into the structure. Let's see if I missed anything. Don't really think that I did. Looking at our, NetStat command, right? This is just a summary of the 3D surface models. Probably a lot of you guys are familiar with. But we get sometimes those are hard to look at for people. So we just tried to attempt to summarize this. So we have the 4 key Greeks here, delta being the most important at the top. In the money, out of the money, call dominated. That's constructive to start. However, keep in mind, charm is, all else equal. As time is passing, that is, pushing down on spot price. That is not supportive, kind of supportive in the opposite direction. So, right, to overcome that is where we need to start to climb up in spot price, overtake those strikes, flip them from being, in the money put dominated as an example to in the money call dominated. That would help to flip that picture, getting more positive deltas below spot price that is supportive. The other thing is net Vanna. Net Vanna has the potential to be constructive today. However, for that to take place, what we need to see is that out of money call speculation and a decline in volatility. So that's what we're going to be looking for there. Looking at those sensitivity points, right? 69.50 going to be that key sensitivity point to the upside, and then to the downside, 68.50. We've talked about all those levels, and just another way to see that, right? These columns here marry up with the net stat itself as well too, right? So when we're talking about net delta, the left-hand plane integral, that is, in the net delta column, that is a sum of all net deltas below spot price, gets that. And then the right-hand plane above spot price, that is everything above spot price, right? Summing that. And then same thing with gamma, same thing with charm. So you can even see here that the magnitude of charm, right? Because remember these bars are dynamic, meaning, right, it kind of finds the largest charm value and then it, sizes itself based off of that. So understanding what this magnitude is representative of that. You can see it's a lot larger in the overhead and that 69.50 strike that we talked about in the net stat command here. Very prominent, right, when we're just looking at the dashboard as well. And that's plus Gex on the day, kind of a key upside target. So it makes a lot of sense. That's kind of the key sensitivity strike in the structure. And then 68.50 to the downside as well. So yeah, then obviously, right, for those in the Discord, we go into a lot more detail on each of those kind of key levels, what we're looking at, if-then statements, trading around those key levels, right? But to simply put, above 68, 80, kind of more favored to the upside, but we want to see that upside speculation via the vol M command, via the cumulative tick, filtered tick of the market trend model, showing us evidence that we're kind of seeing that trending move higher in speculation. And then, right, trading within the transition zone, like best of luck to you. This is generally a choppy environment, so just be cognizant of that. Chop doesn't mean you can't make money though, right? Understanding, selling premium kind of above and below, kind of understanding where spot price is likely not to go, all that good stuff. A lot of people in the community do that as well. So, these tools are very adaptable for any kind of strategy, whether that is, futures trading, intraday scalping, understand where those key levels are at to trade against. Selling premium, we just went over that, kind of understanding where spot price is likely to go, but also likely not to go. And then obviously if you trade, intraday stock, it's basically the same thing as futures. So let me get back to the stream. Yeah, so that's kind of it for SPX. It's kind of it for 0DT. If you have any questions, let me know. If not, we can move on to the single stock side of things. First off, let me load up. I haven't loaded up the script for this morning yet. By script, I mean we just have a right in TradingView. We just have a script. You just saw me do it. It takes about 5 seconds to upload, and gets all of our key levels, so we can just quickly have those. Just Zank 7621. Sorry, not exactly sure how you say that. You said so 68.50 to 72 is the chop zone. Going back to the picture real quick. Yeah, I mean, it's really 75 to 80 to the upside is a chop zone. So I don't know where you got 72 from. Maybe it's just probably just a typo. Maybe, but yeah, I'd be more looking at kind of 68, 80 is kind of the upside of our chop zone right now. Yeah, all good. Yeah, okay, so looking at Meta, looking at Tesla. So Meta looks fine above the transition zone right now in the pre-market. You can see we had a little bit of interaction in the pre-market. Not crazy. That's why we track the levels. Make a lot of sense. You can see with Meta, I mean, there's been a ton of pin action around not only 0 GEX, but plus GEX. So, kind of from an, if you're bullish on the name, plus GEX, great level to, be cognizant of. Obviously, you want to be above that level. You can see a lot of interaction with that yesterday. Yeah, then right, just looking at the dashboard as well. Looking at our transition zone 68.50, again, top of GEX transition zone, going to be a key overhead strike. You can see, 68.60 is going to be a key level to get above. Obviously, a ton of speculation all the way up to 700. But yeah, I mean, we're bullish above the spot price, all that good stuff. Yeah, I mean, here's the monthly expiration. It's looking at that. So, I mean, yeah, Meta looks fine. Yeah, I mean, really just want to see that 650 strike hold. Tesla. Well, let me go back to Meta real quick. Sorry. Yeah, so from an options point of view, looks fine. The only thing I'll note is, right, kind of these moving averages here. She's a 21 and 50, right? Have these on the chart because the institutions pay attention to them. So it's kind of a flavor of institutional momentum. It's on the wrong side of those, unfortunately, right now. But not to say it can't go higher, especially that's why we overlay the options market, right? Because just looking at the price chart, this, may not like how that looks, but then we know, right, if you're interested in the name when you get a position in it, we know that 650 is going to be a key level that we need to maintain. So yeah, that's kind of how you can think about marrying the two of those together. Ticker. Looking at Tesla, again, a little interaction with P-Trans in the pre-market. Like I said, it's a nice little ramp in the pre-market. Let me pull up the dashboard real quick. Yeah, so looking at Tesla, call dominated above the spot price, not surprising. From transition zone point of view, 445, which we just saw, going to be an important level. 450 is plus GEX right now, so honestly, not ideal that that's plus GEX right now. That just simply means in the short term, that's where short-term speculation is positioned. Want to see this move high. Want to see this move higher. However, if we're able to get above 450, all those positive deltas start to become kind of support underneath us. So, wouldn't be the worst thing if we saw 450 kind of overtaken. But the thing to note right now, right, is, between P-Trans and plus GEX, you're kind of right in the middle of that. So risk to reward is, more or less 1-to-1. So honestly, not ideal. It'd be better if some kind of retest of 445. And then, if we do get a progression higher, showing kind of positive price action off of that strike, that would be good to see. Adobe. Yeah, Adobe had earnings yesterday. Keep that in mind. P-Trans is at 350. That's plus GEX as well right now. Yeah, showing supportive action on P-Trans. Didn't it get? Oh, that was Oracle that got hammered yesterday. What were we looking at? This is Adobe. Yeah, so looking at Adobe, it's kind of, again, plus GEX is at 350. P-Trans is at 350. Frankly, there's just not a ton of upside speculation, like positive upside speculation, right? You can see kind of a mix of call and put dominated strikes overhead. So, there's speculation like way up here, but that's like 50% out of the money, so not super relevant. It's called dominated below spot price. So like that's, I guess, one constructive thing, but frankly, Adobe just doesn't look very attractive to myself. So not super interested in that. For what it's worth, just for the web app real quick, like you can see, display mode, we have bars, numbers, and numbers overlaid, all that good stuff. So pretty customizable based off kind of however you want to view it. We have the landscape view as well. You can look at any of the Greeks here. GEX, Delta, Vanna, Charm. You can look at our synthetic net open interest as well. So yeah, all that good stuff. Let me see. I know the bell just rang, so if you guys got to go, not going to hurt my feelings. I'm not seeing any other questions on individual stocks. Let me know if you guys do. There's something else I need to prepare. I need to prepare this scatter plot, which I can show you guys here in a second when I'm done with that. Scatter plot. Yeah, so what I'm pulling up here, this is a scatter plot of call dominated stock, right? We produce a spreadsheet every morning, well, throughout the day, that has all of our proprietary metrics on it. And we're in the process of working on building out an API, because I know not everyone's a wizard in Excel. Unfortunately, I spent too much time in it in my life, and I am. So built a database of, each sheet every day I add to it. Something I look at to kind of quickly help us whittle down our watch list, because it can be overwhelming as a swing trader. There's thousands of stocks. It's like, which one should I look at? Looking at call dominated stocks, and then really honing in on which ones look best. And so the way that I like to do that is we have, let me see. So to the left means it's above P trans. To the right means it's below P trans, which is right as our key upside acceleration level. And then above the x-axis means that it's below plus X, which is our top upside level. And then below means that it is above plus X. So really what we're wanting to look at is stocks that are above P trans but below plus X. So this kind of zone right here. And then what we're wanting to further look for is what have the best risk to reward opportunities. And by that, we mean that it is, closer to P trans and has some runway to plus X, like Starbucks as an example, less than 1% downside to P trans and almost, 6% upside to plus X. So an attractive name, probably something worth looking at. Pepsi, same thing. APO, I think it's Apollo or something, Devon Energy, Zillow, FedEx, all these stocks kind of right in this, I call this like the target zone or whatever. So just keep that in mind. We also have, this is looking at, so I call this the core stocks, and this is just these stocks right here. It's all the Mag 7 plus some other larger components of different sectors. So we can quickly just see, all right, are a lot of these stocks, above P trans, a lot of them like close to plus X, all that good stuff. So right now, like none of these names look super attractive aside from Microsoft looks pretty good. Meta looks pretty good. If it can get above P trans, that'd be fine. But yeah, that's kind of how you should read that. And then same thing with the sectors. Again, just quickly for the sectors, we can quickly see, all right, are things above or below P trans, all that good stuff. So it kind of gives you a health of that as well. So hopefully these scatter plots are helpful. I try and post them most days. Again, just kind of a quick way to understand where those, constructive stocks may be. But with that, we've been on about 30 minutes. I'm not seeing any other questions come in. So hopefully y'all got some value out of what we talked about today. The last thing that I will leave you with is for those that are not members of Gamma Edge, completely fine. We'll continue to do this free stuff forever. But the thing I wanted to show you is if you go to our website, gammaedge.us, go to free courses, Gamma Edge Fast Pass. This is literally our entire education platform. Everything paid members gets. Don't hold anything back from you. It's all of our tools, frameworks, strategies, pretty much everything, right? And so, neatly packaged up for you. A lot of written content, a lot of videos. It is a lot of content. It's going to take some work to get through, like no doubt about that. If you're looking for kind of a quick win like environment where, we just tell you what to buy, what to sell, like this, that's not us. And that's not going to benefit you in the long term. So if that's what you're looking for, we're not going to be a fit. So I just want to be upfront with that. So, you're not wasting your time going through it. But, we have hundreds of members that can attest to the value of what we do. And so, again, basically giving that away for free to you all. So you guys can go sign up for it there, all that good stuff. And yes, we need your email because that kicks off the automation process in our back end to send you all the required material that you need. So yeah, just being transparent about that. And with that, that's pretty much all we got for you guys this morning. So appreciate it. Make it a good Friday, and maybe we'll do something intraday, but if not, we'll see you back here next week. And if you're in the Discord, obviously we'll be in there throughout the day. So appreciate the time and thank you.